Hey guys, I'm just working on a new advanced course for my students that's really going to teach them how to look at the market in a more holistic way and not just by looking at a couple of simple indicators, because over the long term, for real success in the markets, you actually have to be able to look at the market as one big piece and break it down into individual puzzle. Anyway, this course, I'm hoping to launch it in early November, so stay tuned for that. So this week I received a new record amount of emails, and a lot of those emails focused around one stock, and that stock of course being Apple. Apple stock had a very big move to the upside this week on the back of news that the new iPhone, that iPhone 7, had been sold out. So everyone's asking me, hey, what is the intermediate to longer term outlook for this stock now based upon this big move that we're having this week? So I thought, hey, why not make today's vlog about Apple and answer all those questions all at once? So let's have a look at the charts, and I'm going to give you guys my take on where I think Apple is right now.
So let's keep it very simple. We're going to look at the charts of Apple, and I think there's no reason to overcomplicate things. This is the multi-year chart looking at Apple using a very simple 200-week moving average. That's that red line you're seeing down here on the chart. And you can see that moving average is now held 3 times. Once in 2009, a second time in 2013, and the third time this year in 2016. The fact that the stock never faltered below that 200-week moving average meaningfully, and it's held as support, I think is quite telling. So let's look at this a little bit closer up, and you can see that the stock actually in July or into early August or so started breaking past diagonal resistance. So this series of lower highs that the stock had been making finally was being challenged by a breakout in July. The stock then did a classic retest of what used to be resistance, then became support. So this diagonal resistance line became support. And now this week, we're seeing a very strong bullish outside reversal week. I think that's very much something we need to respect. When you see a big move like that, you have got to respect it. Okay. Now that doesn't mean the stock's going to start continuing rallying at this pace. In fact, I think that's very unlikely. But a big move like that, technically speaking, particularly if it happens in the back of a retest like this, is very, very constructive. Let's look at the medium term moving average. And you can see here, if I give you guys the daily chart, you can see that that red line here, that's actually a 200-day moving average. That 200-day moving average held as resistance back in November 2015, once again in April of this year, 2016, and then finally we broke above it in late July, and we've now retested it as support. So not only did we retest this 200-day moving average, but also that diagonal resistance line I just showed you guys before. So this is a very, very constructive move as far as I'm concerned. So I think the path of least resistance, based on this very bullish statement on the back of the new product announcement, I think remains to the upside through the intermediate term lens. Looking at this through a multi-month lens or so, I think the path of least resistance does remain to the upside. I think 120 all the way back up to 125, maybe even 130 is not out of the question if we look at this through a multi-month, maybe a multi-quarter lens at this point. However, as we always have to look at things in multiple time frames, let's keep in mind that if we look at this on a very near-term basis, looking at very near-term moving average like an 8 and 21-day moving averages, also throwing in some momentum oscillators, I think the stock is getting increasingly overbought here after now having gapped higher for, let's see, 1, 2, 3 days in a row. It does increasingly look to be quite exhausted. So there's a couple of things one can do here. I told Clubhouse members this last night in a special webinar, and again this morning. For a quicker trade here, one could go and try to sell out of the money call spreads for a bit of a mean reversion move. I don't think the stock has to fall apart here, but I think it does have to start consolidating a little bit. At least that's what I think is the path of least resistance here for the immediate term. Alternatively, and or once the stock has consolidated a little bit, one can go in and sell out of the money put spreads, which is sort of a quasi-bullish or more conservative way to express a bullish bet at this given juncture. So last, let me quickly say that a lot of folks that I've been speaking with, both on the private client side and on the institutional side for the past few weeks, people have been very, very bearish on shares of Apple. A lot of that basically because the stock hasn't done much to the upside. I remember a lot of folks, very smart folks also, told me that they really think Apple stock is dead. And look what happened this week so far. I'm recording this before the market starts trading on Friday morning. stock is up something like, let's see, almost 12% on the week. So that's where I'm thinking Apple's going to go here in the immediate term, a continuation to the upside based upon a very, very bullish statement from investors here in the immediate term. I hope this makes sense, guys, and I'll see you in the next video.
One last thing, guys. Next Thursday, September 22nd, I'm holding a special presentation on my options income secret strategy. This strategy will allow investors and traders to shoot for steady monthly income using options. The link to sign up for the webinar is down below in the description of the YouTube video. Please sign up and I look forward to seeing you there.